I want to introduce a guest to us, and it's through Prime Corporate Services. It's called PCS. I did a little bit of an arm twister to get them on the call, and I'm going to introduce our trainer today. His name is Nick, and he's the vice president, Nick Bulis of PCS, Prime Corporate Services. And Nick has been helping out entrepreneurs and small business owners really for the past 5+ years now. And he's personally helped over 20,000 individuals himself. And I actually came to these guys as well, just with things that I need help with also, and will continue to seek their services. And I just thought, like, this is a group, this is a community, this is a company that understands our audience, they understand our niche, and it's someone that you need to know about. So with that said, I'm going to get out the way, and I'm going to introduce Mr. Nick on this call, and we're going to take some notes. And I encourage you all to just shut off all distractions, because it's going to be a really good call. So that said, Nick, are you here?
I sure am, Jason. Am I coming in on your guys' end?
Yeah, man, you sound loud and clear. How you doing?
I like it. I'm doing well. I appreciate the introduction. Man, just having you rattle off some of those numbers is pretty humbling. 20,000 something odd businesses that I've personally worked with. That's just the tip of the iceberg for overall what we've done here in the duration of the past 5 to 10 years. So just saying that's got me hit myself in the knee to make sure that it's true. So I appreciate the introduction. So guys, an absolute pleasure to be here, right? First and foremost, it's always refreshing to have an opportunity to speak with new business owners and prospective business owners. So I appreciate you guys giving me the opportunity to take some time here today to shed some light on some different facets that we'll be discussing. Now, guys, bottom line, my number one goal here today is to make sure that you have as good of an understanding as possible how to keep as much money in your pockets as possible from a taxation standpoint. Right now, a lot of you guys, as soon as you hear tax, right, it's a rather dense topic. The sediment of the conversation gets a little bit daunting. Don't let that be the case. What Jason has worked out with us is you guys are all going to have an opportunity to speak to one of my corporate advisors for a one-on-one consultation. Not only just a one-on-one consultation, but after this presentation, we'll also make sure to block some time for a Q&A, make sure we can get any questions you guys may have addressed to the best of our abilities. So let that kind of put your mind at ease to a certain extent. And so that being said, let's go ahead and dive right into things, right? So how to make more money as an entrepreneur, right? I think it's pretty safe to say that the vast majority of entrepreneurs and prospective business owners initially get involved in self-employment with the hopes of creating additional streams of income, right? AKA make more money, right? So here at PCS, what we really focus on isn't just the make more money aspect, but the big thing here is also making sure that we keep as much money in our pockets as possible from a taxation standpoint, right? The motto that we really live and die by here is it's not how much money we make, it's about how much money we keep, right? So we've done an excellent job of doing just that, and that's making sure that we keep as much money in our clients' pockets as possible, right? Now, one second. There we go. Okay, so give you a little bit of background on PCS, right? So been in business for a little over 10 years now. Throughout the duration of that 10 years, we've helped set up a little over 65,000 businesses, right? Now, business ranges from, sectors like e-commerce, real estate, investors, right? Stock market, Forex, you name it. Right. So the benefit here is with the vastness of our expertise, we can assist across the board. Right now, many of you already have probably, existing business entity structures put in place, LLCs, S Corps, C Corps, right? You name it. For those of you who do, kudos to you, right? You're one step ahead of the curve. At the same token, to take it one step further, it's not just about having a business entity put in place. It's making sure that you're also utilizing that business entity to the best of its abilities, right? I use the analogy of a business entity is like a tool or a vehicle, right? What good is a tool if you don't know how to use it, right? What good is a vehicle if you don't know how to drive it, right? So we'll make sure that you have the proper structure put in place that best suits your personal circumstances and business, as well as making sure that for those of you who have existing businesses, making sure that your business entity is operating with the proper tax statuses and legal recognition. Right now, millions generated in a business credit, right? So diving right into the financial facet of what we do here at PCS, the business credit element, right? So for those of you who are like my dad, who have an 800 credit score plus, but didn't start using credit until about 2 years ago, which is still a little bit of a mystery to me of how that's accomplished, but it is possible. So for those of you who don't think that credit is an imperative tool to the business, there is one thing that I can promise you. The more financial resources you have, the better, right? I hear all the time, I don't use credit. Completely fine. But at the same time, just because you don't use credit at this very moment, it doesn't mean that you never will use it, right? So you want to make sure at the very least that you have a business credit profile developed so when it is appropriate, it's readily usable, right? You have readily access to corporate funds. So we have in-house corporate financial advisors that will help you get to point A to point Z in building your business's credit profile. Okay, so the third element is taxes, right? So we have a team of in-house CPAs and accountants. Their sole purpose is to come up with tax strategies to keep your tax liability as low as possible. Bottom line, one purpose, to keep your tax liability as low as possible. You know, everybody's tax situation is different, right? Some of you have W-2 income, some of you have 1099, some of you are, already currently self-employed. So the purpose is to come up with a strategy that, once again, is tailored to your specific circumstances. And now, I would probably go on a limb here and say that 99% of you have a tax preparer, or whether it's an EA, whether it's a CPA, or maybe you're doing your taxes yourself, right? But at the end of the day, not to hit you with the cliche of death and taxes, but death and taxes, I would like to think that we're all doing taxes. Don't let that divert you from taking advantage of what Jason has put in place with us with your free consultation, right? And the reason that I say that is we have 70,000 pages of the tax code. It's flooded with different tax provisions and it's flooded with different tax functionalities, right? So once again, let's make sure that we're keeping as much money in our pockets as possible. Now, the last and fourth bullet that I'm probably most proud of here that represents, our client satisfaction, which we hold on the front most important elements here is client satisfaction. So better business bureau rating of an A+, 5-star Google rating with over 250 different positive reviews. With the BBB, right, we have kind of a saying here. It's our president's claim to fame, if you will. But we have a higher, better business bureau rating than the BBB on the BBB, right? So if anything, hopefully that's just a little bit of a testament that we take pride in what it is that we do, and we take this very serious. And our goal at the end of the day is to have as many satisfied clients as possible. And now, before we get too carried away here, legal disclosure, right? So I'm not a CPA, I'm not an attorney, right? We have a staff of attorneys and CPAs and corporate financial advisors. And so throughout this presentation, there's going to be some visuals that have examples with different numbers, right? These are generic. Okay, these aren't your specific circumstances, right? These aren't your exact numbers, but I want to make sure that I disclose that they are generic examples. and I do a good enough job of staying in trouble. So I want to make sure we get that out of the way. So once again, these are not your exact circumstances. Okay? Now, the intent here, guys, is one of three things, right? If there's anything that you guys take away from this webinar, is either one, hopefully it sheds some light on tax advantages, two, how to protect your business investments, and three, how to get away from being the personal bank to the business, right? One of those three things, if any of them resonate, mission accomplished. Tax advantages, protect business investments, get away from being the personal bank to the business. And now to go one step further on intent, if there's anything that you resonate with during this webinar, let it be this. The first thing that we do when we go to start a business is legally do so. The first thing that we do when we go to start a business is legally do so, right? And the reason being is the IRS, they want businesses sanctioned and bounded by law, right? And the reason I know that they want businesses legally and sanctioned is for the very simple fact, by legally starting a business and showing intent to treat it as a business rather than a hobby, it opens up sections of the tax code that we don't have the ability to take advantage of without legally doing so, right? So first things first, always, always, always show yourself as a legal business entity. Okay, now, what are the tax advantages? They're tax deductible expenses, right? So by having the proper structures put in place, it opens up a section of the tax code that gives you access to over 250 different tax deductible expenses. And now a lot of these expenses are what we refer to as anyway expenses. Okay, internet bills, phone bills, power bills. As long as you have internet connection, you guys are in viable positions to be operating the business. So gas, mileage, all tax deductible. And, one of the deductions that I do want to emphasize here is the coaching and education sector, right? The tax code's always changing, guys, right? So in 2018, when Trump's administration took office, we saw some fundamental changes. 2021's here now. We also now have a new administration that just took office. We're already seeing some new fundamental changes, right? We're talking about a potential tax spike that would be the greatest in the history of our country from a capital gains standpoint, right? So what I'm getting at here is the tax code is always changing. Okay? So one of the big changes that's taken place as of 2020 is the education deduction. So in 2020, the education deduction lapsed.
Hey guys, I just want to get you
right? So in other words, it's no longer in existence, right? The only type of education deduction that's available is through an accredited university, right? So that's obviously very problematic for a lot of you individuals out there that have gotten involved with mentorships, coaching programs, seminar circuits, right? Anything in that realm. All those type of investments are by default categorized by the IRS as outside education. Once again, no longer existence. However, put your mind at ease. As I mentioned, 70,000 pages of the tax code with the proper tax provisions. What we're able to do is claim these initial investments as legal business startup expenses, which in return makes your investments 100% tax deductible. Right? So there is light at the end of the tunnel, right? It's just making sure that you're up to date with the tax reform and are conducive with the tax changes, right?
Hey, Nick, sorry to interrupt real quick.
Yeah, please do.
I never like to assume anything. So can you go back a slide for a second?
Yeah.
I know when I first started, as silly as this sounds,
yeah.
I've seen this phrase, deduction, tax write-offs. What does a deduction actually mean and how does it help? Because I know there's new entrepreneurs here, and I just really want to break things down.
Yeah, no, I appreciate you bringing that question to light. So to keep it simple, let's bring it back to rudimentary math, right? Addition and subtraction. So what a deduction does is it lowers your taxable income, right? And I'm going to go over some examples here coming up on the next slides. But for example, if you're making an income of, let's just say $55,000 and you're able to come up with $10,000 worth of tax deductions, rather than being taxed on $55,000, you're only taxed on $45,000, right? So it lowers the overall amount that you're being taxed on. The more money you can make, but at the same time, the less money that you can be taxed on, the better, right? So it overall lowers the taxable income that you generate. Does that make sense, Jason? Does that answer that question? Explain it a little bit more in depth. And like I said, we're going to go over some examples here, so I think we'll bring it full circle with some visuals, but keep it simple. Addition, subtraction. You want to lower your taxable income, aka deductions.
Makes sense. Thank you. Is that helpful, everyone? Give me some feedback if that's helpful. I know I wasn't the only one at the time when I was doing my research years ago. I was like, what is that?
Trial and error, right? Getting ran through the coals from a tax standpoint one time will get you up to date with tax deductions, that's for sure. So I'm assuming you learned relatively quick.
Yes.
Keep it simple, right?
Thank you.
Of course. So in doing so, let's dive right into this example. Right now, to bring the legal disclosure full circle, these are not your specific numbers. These are not your specific circumstances, right? At least I hope they're not, because once again, if they are, you're being ran through the coals from a taxation standpoint. Okay, so we're going to use myself as an example for sake of conversation. So let's say that I'm an individual tax filer that's grossing an income of $55,000 from my W-2 occupation. So I'm a W-2 employee that's grossing $55,000. Okay, so as an individual, we're entitled to our standard deduction, which is $12,200. Okay, so once again, math. Subtract the 12.2 from the 55,000. Whoops, sorry, I went up a slide. This is touchy. 1 second. There we go. Sorry. So subtract the 12,200 from the $55,000. That brings us to a net income of 42,800. So that means we're being taxed on the federal tax rate at 22%. So 22% of 42,800 means that Uncle Sam, the IRS, is taking $9,416 from us in the form of taxes, right? Dang near $10,000 they're taking from us. And now that's just from a federal tax rate standpoint. For those of you who live in states like California, Illinois, Massachusetts, New York, that have some high state income tax, on average, that's anywhere between 3 to 5% based off of those states. That means that they'd be taking an additional, roughly speaking, about $2,000 from you in state taxes, right? You're looking at a tax liability where Uncle Sam's pocketing, roughly speaking, $11,000 from you off of an income of $55,000. That's very significant, right? I'm sure there's not too many people that are on with us today that would turn down a $10,000 gift at the end of the year. You'd much rather have that capital at your disposal to either A, reinvest into your business, or B, have it in your account rather than theirs, right? So that's right there what the individual tax circumstances are for W-2 employees. Okay, now, the next slide, all we did is structure an LLC, right? So these are the exact same numbers. However, the big change is I now have an LLC. So let's run through these progressions again. So $55,000 of conventional W-2 taxable income. I have my standard deduction of $12,200. And the third bullet is the kicker, $10,000 worth of tax deductions, right? So to bring Jason's question full circle, how do tax deductions work? And I said, let's use simple math. Let's continue to keep that on board. So the 250 different tax deductible expenses, what makes up this $10,000 worth of deductions. So once again, internet bills, phone bills, power bills, traveling costs, mentorships, subscriptions, right? You name it. That's what's making up this $10,000 on a minimum. That's what our CPAs report that we come up with. So 10,000 plus 12,200, that puts us at now a taxable income of 32,800. Right? All we did here is we added these two from a deduction standpoint. So we're now being taxed on $32,800 at a 12% tax liability. Right? That brings our tax liability down from over $10,000 down to less than $4,000. That's over a $5,000 swing of tax savings by no other reason other than showing legal intent to start a business, aka legally structure your LLC properly. $5,000 is a nice chunk of change, right? Once again, let's keep that money in our pockets to continue to grow and scale the business. Right? But big savings there. Okay, does that make sense, Jason? Any questions on your end? Is there any questions that you're getting from others?
Yeah, I just want to reiterate, you all, like that. This is a big deal. Like, again, my own ignorance. When I started, I was like, whatever. But when I tell you, like, this was probably like maybe 3.5 years ago, and my CPA said, you owe, like, you're probably gonna owe about a good $120,000. I was like, say what? Did you lose it? Did you add a zero where it shouldn't be? But the thing is, it's like, I extrapolated that number, and of course it's bigger, but like, even from the example he gave of owing 10 grand versus owing 3, like, that is a savings. Like, that is money in your pocket. That is money that doesn't have to go out. And this is a big deal. So, like, for me, now it's like everywhere I can find deductions. Can I write this off? Is this the write-off? I'm calling my CPA. Can this work right here? Because I know saving money is me not leaving, like, me saving money on taxes is me not having to write a check for more money unnecessarily. This is a big deal. So yeah, we're good. We are good.
It puts you ahead of the curve. By saving money on taxes, you're essentially already making money with your business, right? And as Jason was saying, tax liability, the more money you make, the more they want to take from you, right? And I can promise you, the feds and the state government bodies, if you're not willing to fight to keep your money, they have no problem taking it from you, right? So without a doubt, right, you want to put yourself in a position to succeed from the very beginning. So right on the dot, Jason. Now, next slide coming up here. So this is just the reiteration of the tax savings from that $55,000 example, right? And once again, guys, the more money you make, the more they're going to take from you. So this just compounds, right? But $55,000, that's the average earned income here in our country. By having an LLC, $5,000 is at minimum what you're keeping back in your pocket. So how the LLC and S Corps work, right? Just from a fundamental standpoint, and LLCs and S Corps, just so everyone's very aware, are very fundamentally similar. Everything from an income and from an expense standpoint flow through to you personally and all report on one filing. Okay, what they're referred to as is a pass-through entity. Okay, now what the pass-through function does, for those of you who have taken notes, you just want to write down, apply all deductions against all income. Apply all deductions against all income. So that's exactly what you just saw in those examples. So we're now able to apply all of those new business deductions. Once again, those up to 250 different max portion deductions that you have with the LLC or S Corp, not just against the income that you're generating from the business, but your overall gross taxable income across the board. So including your W-2 incomes, your 1099 incomes, your other business income, or any taxable income for that fact. If you were to think about the pass-through function just analytically, which a lot of you have already kind of caught on just based off of the example I just went over. By starting a business, it could literally be nothing more than a legal tax shelter for your personal sources of taxable income, right? All it's doing in simplest terms is giving you the ability to take deductions that you don't have the ability to take without, right? Plain simple. Now, some additional benefits to the LLC outside of just tax advantages is asset protection, right? I think that we're all at this point aware that we live in a pretty sue-happy world at this point. I think that everybody would probably raise their hand and could have a, some sort of lawsuit story, or they've heard of one, right? We all know, for example, the coffee story with McDonald's. Lady orders coffee spills on her. She sues McDonald's and ends up making a couple $1 million, right? There's an assortment of ridiculousness in this day and age. So we want to make sure that we have some sort of asset protection put in place, right? I hate even really talking about this facet of business, but at the same token, it is important. And we also do want to make sure that we are separating ourselves on a personal level from the business as much as possible. So what happens from a personal standpoint doesn't affect us on a business level. And vice versa, what happens on a business level, it doesn't come back and affect us from a personal standpoint, right? So asset protection is critical. To rattle off a few statistics, right? Like I said, I don't like to put a whole lot of emphasis on here, but just so you can get an idea of what we're looking at here in our country from a lawsuit standpoint, over 40 million lawsuits filed every year in the United States alone. Okay, that means that 76 new lawsuits are entering litigation every minute, right? Just saying those numbers is pretty nauseating, right? With that being said, here are some of the different type of lawsuits. These are the top 9 lawsuits that we have in our country. And the reason I have these an example is I want you to also realize how arbitrary they are. Right? Breach of contract, slip and fall, discrimination against employees, harassment, right? Intellectual property rights, right? A lot of these different type of lawsuits are arbitrary, right? Now, I don't bring this up to scare you guys in any way, shape, or form. I'd like to think the vast majority of you guys will never have to go through any of these type of hurdles. I bring it up though, just so you're aware, and you can also make sure that you're putting yourselves in a position of protection. Separate and protection is the name of the game there. Okay, now, switching gears to the financial side of your guys' business. So, business credit formation. Bottom line is building a business and growing a business will always cost money. Right? Capital will always be on the forefront of importance for any business owner. Right? Whether you're a new business owner and you're just getting started, or you're an existing business owner looking to grow and scale, capital will always be relative, right? One of the things that I always say is, to keep it simple, you want to go from a $10,000 generating revenue business to a $20,000 revenue business, more capital. You want to go from $20,000 to $40,000, more capital. It will always be relative, right? So building your business credit profile, plain and simply, doubles your financial resources, right? It allows you to get away from being the personal bank to the business, right? Now, not only getting away from being the personal bank to the business is also getting away from being solely personally financially liable from the business, right? Back to the asset protection. We want to not only separate ourselves from a legal standpoint, but from a financial standpoint, right? Put us in a position to grow and scale our businesses with the best of our abilities, right? So getting away from the personal bank to the business is the name of the game there. Now, by developing your business's credit profile, keep in mind you're also developing a resource that's conducive to business, right? And what I mean by conducive to business, corporate funds, statistically speaking, business lines of credit, statistically speaking, have much lower interest rates and advantageous terms, right? So you're developing a resource and tool that's also conducive for business, right? That's what it's there for. They gave us 2 federally sanctioned credit profiles for a reason, right? Personal, business, right? Now, the sooner you guys can get away from having the contingency of, do I make a business decision or do I not make a business decision based off of personal circumstances, the better, right? As long as you have that contingency, it's always going to be an emotionally driven process for you. Not that emotions don't work well with business, but we also want to be able to harness our emotions and have it to the point where we have other options, right? It makes it a much simpler process. Now, with that being said, guys, like I said, if we can just plain and simply understand that by starting a business, we can save money on taxes, and we also have options of starting our business from a financial standpoint that allows us to get away from being the personal bank to the business. Starting a business should be about as much of a financial no-brainer as there should be, right? Just for the simple fact, there's now inherent value by attempting to start a business, right? Now, as I mentioned previously, what we have worked out with Jason is significantly different, right? He, at the very least, wants to make sure that everyone who's associated with him is up to date with the tax reform, have a good understanding what's changed with the tax code and how those changes directly affect sectors of self-employment. So he's covering everybody that's in this group's free consultation with PCS. And so make sure you copy paste that link and take advantage of the consultation. Now, to go one step further, what we also have worked out with Jason is at the end of that consultation, you guys are actually going to have the ability to take advantage of what we refer to as is a complementary LLC or S Corp. Complementary LLC or S Corp. You heard it correct, right? Complementary, right? At the very least, everybody who's attempting to start a business, the first thing that I said is we need to legally do so. And with that being said, complementary LLC and S Corps are now yours for your taking. Let's make sure that you guys have a good understanding what complementary means. So rather than paying the retail cost for one of our business entity structures that can be upwards of $1,500 for a business entity structure, all it is that you guys are going to be doing is paying whatever our hard cost is based off the state that you reside in, right? So for those of you who have business entities, you know that each state has a different fee. For those of you who don't know that, now you do. Every state has a different fee in setting up an LLC or an S Corp. So all we're doing is setting you up with your entity and structuring it for you. And we're not charging anything for the actual structuring. We're just covering the hard costs, right? You guys are just responsible for the hard costs in your state. It can be anywhere from $300, $500, but a few $100 is what you guys want to expect there. So make sure you take advantage of what Jason has put in place for you guys. Take the opportunity to speak to one of my advisors, get a complete rundown of what entity structure is going to be most conducive for your situation, and let's make sure that we're protecting the investments that we've made, as well as moving forward, keeping our taxable income as low as possible. All right, but it was a pleasure, guys. But that's all I have on my end, Jason. I don't know if you want to add on to that, or if you've already gotten some questions. We're more than happy to start a Q&A, but the floor is yours.
Absolutely. And first off, I appreciate you coming, Nick, and you just straight to the point, man. I love it. Like, I like the fact that you did exactly what you came to do and no fluff. So that's awesome. Before we get into Q&A, I like Nick mentioned, I do recommend if anything, for the consultation, if you don't have these structures set up in your business, to take advantage of this complimentary consultation just to see where you're at and what you need help with. Like, it won't hurt you in any way to have a call, because there may be things that, like Nick already talked about, that you could learn, that you could get more deductions, and you can learn proper structures to save money and make money. So that is extremely helpful from that standpoint. So I do want to go through a few questions here. Let's see here. Teresa asks, can we create a business credit file separate from personal credit? I guess, can we open up a business line of credit separate from personal? And I guess my add-on to that is, what would be the advantages of doing that, or the benefits or disadvantages of not opening up a business line of credit versus personal?
Yeah. Great question, Teresa. So to answer the question directly, we have two federally sanctioned credit profiles. We have our personal FICO credit profile, which, just so you guys know, you're inherently given as long as you have a social security number. We also have a business credit profile that we can establish and build. So that's what I was referring to, is not just utilizing business credit, but also utilizing business credit that's tied to your business's credit profile. Right? Using quote unquote business credit that's still tied to your FICO credit profile, well, that's just a facade. All it is that you're using more personal lines of credit that your credit card has your business's name on, right? So that's what we want to get away from, right? So in the process of working with our team and our corporate financial advisors, we're not only helping you obtain business lines of credit and corporate funding, but those funds and that capital is actually tied to the LLC or S Corp's business's credit profile. So yes, you have two different credit profiles, personal, business. So it all be tied to the business. The advantages, not to be too rhetorical, but the big advantages is advantageous interest rates and advantageous terms. Right. Generally speaking, you're starting out with 0% interest lines of credit for extended periods of time, and much lower interest rates after 0% interest rate promotional periods. Right. So interest rates. Then the other one is financial liability. Right. You don't just want to get away from being the personal bank to the business. You want to get away from being solely personally financially liable for the business. Right? There's no limit to how many businesses we can start, how many business credit profiles we can establish and build. We have one FICO, we have one social. We don't jeopardize that for something potentially out of the business's hands. They obviously give us two federally sanctioned credit profiles for a reason. Personal, business, right? Draw a line between the two. So hopefully that sheds some light, Teresa. Does that answer your question, Teresa, Jason?
Yeah, that was very thorough and helpful. I greatly appreciate it. Someone asked, if you have a business in Canada, do you really need to create a business in the U.S. if you serve U.S.-based businesses?
So very rarely is it like an imperative necessity. The only time that it would be imperative, depending on what your business is doing from a marketing standpoint, there's some marketing affiliates and agencies that require that you have an EIN number. So if that's the case, then yeah, you're going to want to get an LLC put in place. We do have a tax treaty with Canada. So regardless, you can avoid double taxation. If you are in Canada, however, and your business doesn't require you to have an EIN number, I would probably honestly say don't get an LLC put in place. Just keep it all in Canada just for sake of simplicity. But if it does, then that's an option for you, as well as obviously get your LLC structured.
Awesome. And I do have another question. I think I know the answer to this, but someone asked, is there a minimum amount of business income we should be at before we start an LLC?
Absolutely not, right? Absolutely not. And that's the reason why I know you guys have probably heard me say this, 10 times throughout this duration, but the first thing that we do when we go to start a business is legally do so. And the reason that I say that, the only thing that you're ever going to do with your business that's not a performance-based concept, right? That is not a performance-based concept is your LLC, right? And the reason that I say that is, well, let's look at the glass half empty. Right? Well, let's say that your business ends up going in the red, or it ends up not being a viable option for you to pursue. Well, if that's the case, that's really when you want to be recouping your investments come tax season. And what I mean by recouping your investments is with tax deductions. Remember, the LLC gives the ability to take tax deductions. You can't without it. So you're now able to apply all of these tax deductions against your W-2 income. So it's now acting as nothing more than a legal tax shelter. So no way, shape, or form does your LLC need to be structured based off the contingency of income. It's the first thing that you want to do. It's the foundation, just because no matter what, good, bad, profit, loss, we want to make sure that we're protecting investments from a tax standpoint.
That makes sense. And a follow-up to that too is in regard to business credit, someone asked, does it affect your ability to start a business credit profile if you have a low personal credit score?
So great, these are some great questions. So yes and no, right? So our team of corporate financial advisors, they have numerous options, right? Corporate finance is extremely fast, right? What works for Jason, who has X income, X credit score, and X debt load, is going to be different than what works for Nick, who has X income, X credit score, and X debt load, right? So the purpose of working with one of our corporate financial advisors is to get you to point A to point B in the most expedited manner possible. So there's numerous ways we can build a business credit profile without having any sort of implications of your personal FICO. Okay, now at the same token, for those of you who do have very strong personal FICO credit scores, we can get you to point A to point B with your business's credit profile in a more expedited manner by pivoting off of your FICO, right? So to sum that up, you have options, right? We can do it to the point where there is no implications of the personal, and we can also do it to the point where we do utilize your FICO to grow the paydax, right? So there's options, whatever's going to be best for your circumstance.
Very good. Thank you. Thank you. Let's see here. Can an LLC or S Corp be set up while working as a W-2 employee as well?
One more time with that question, Jason.
Can a LLC or an S Corp be set up while working as a W-2 employee? Like, I guess this.
I completely. Get that question. So, to answer once again, just straightforward, absolutely, right? A matter of fact, I would go to the extent of saying that if you have an income, if you have a W-2 occupation, you would be doing yourself an immense disservice by not having an LLC or an S Corp. And the reason being, once again, what does the LLC do from a fundamental standpoint? It opens up a section of the tax code that you don't have access to without it. So AKA, it gives you a complete new pool of deductions that can all be applied against your W-2 income, right? So to bring everything full circle, when I said that having an LLC could be nothing more than a legal tax shelter, that's exactly what I meant by that. We can apply your business deductions, whether your business makes money or no money, we can apply your business deductions against your W-2. Tax savings.
Love it. Thank you, Nick. And then this question is, I believe it's rooted in like business, like open up a business line of credit. And the question is, are there ways that I could possibly get funding for my business by opening up a business line of credit? And I guess I'm assuming these are areas that would be, you'll go over with the experts on the call, but like, is there anything to speak to that of like, is that a possibility? And if so, what would that potentially look like?
So you kind of took the words out of my mouth, Jason. Great question, whoever asked that. At the same token, I always recommend holding off trying to attempt to do anything from a business credit standpoint until you speak to one of my advisors, right? And the reason being is, keep in mind, banks are businesses, right? So you go to the bank, you let them know that you started a business. The first thing they usually hit you with is, you want a business credit card? You say yes to that. All you did was just go develop another personal line of credit that just so happens to have your business's name on it, right? So that's what we want to get away from, right? So hold off doing anything from a business credit standpoint until you speak to one of our advisors, because it's not just about getting business credit. It's making sure that the business credit and corporate funds are actually tied to your business's credit profile and not your personal FICO credit profile, right? And in doing so, you actually have to go through an institution just to establish your PAYDEX profile. You're not just inherently given a business credit profile. You have to go through an institution. So hold off for all of you guys that are eager to immediately hit the ground running and start coming up with different funding strategies. Wait until you speak to one of my advisors just to avoid that hiccup.
Perfect. And as a segue there, I see a lot of questions about, just as an example, what would I do for this setup if I'm in this state? Or how do I go about this setup here if I'm in this state? Or do I file this W-2 and this LLC? Guys, and ladies, that's the purpose of the call. So like, go ahead and book a call right now while it is complimentary, and you can go over those things with them. But like to go over like unique situations based on where you live at, like that's not the purpose of today. Like this is an education, kind of a jump off point to educate you about things that we all should be aware of. So that is the purpose of the call. So really quick, who has already booked the call? Who's already booked the call? I put the link in the chat box. I want you all to do that. Remember, I always say this. I say action is the agent of change. Nothing happens until you take action. So who already booked their free consultation? Right? We've already established the complimentary consultation. We've already established that even if you don't have anything set up right now, you don't have to make a certain amount of money in order to start an LLC. Like, do this. Like, do this. I'm telling you, like, learn from my mistakes, because I paid for them handsomely, and don't be like me. So who booked their appointment? All right, me booked, Sergio, Jose, Regina, Rob. I have. Awesome. Just do it. It'll be great. Also, Nick, before we get out of here, for the people that are booking, just so they have an expectation, is there anything that they need to know? Is there anything that they need to have ready, or how they should approach this meeting so the time can be best spent with your experts?
Yeah, I appreciate you asking that, to make sure that everyone's properly prepared. So nothing in particular, but plan for about an hour of time. Right now, I say an hour of time with the anticipation that there's probably about 30 minutes of content that your corporate advisors can be covering with you. For the one-off situations that Jason just brought to light that are being asked, plan another 30 minutes to dive into the intricacies of your circumstances. So pen, paper, hour of time. They're going to go over the legal end of the business as well as the financial end of the business. Right, but that's what I would say to be prepared for, is nothing other than that time, and then attentiveness and undivided attention, if you would. That goes a long way.
Perfect. Thank you. And I'm just going to stress this again. Like, I know, like, I can relate to a lot of people on this call. You may be thinking, well, my business isn't big enough, or I don't have enough clients, or I don't make enough money. I was in that same position. Like, when I first got started, I was like, I don't even need to pay attention to anything like this. And that is the wrong thinking. I can tell you that from experience. Like, it's like that adage, it's better to dig your well before you need to drink, right? It's better to dig your well before you need to drink. So if anything, get the information. Like, I've done the heavy lifting. I've paid for your ability to be on this complimentary session. So just take advantage of it. And I hope this call was very valuable to you all. So that's all I have. Is there any final or parting words that you have, Nick? Because because otherwise I greatly appreciate you all coming out and really just being a blessing to our audience, and we got some good info today.
Yeah. I mean, nothing in particular. I do think that you had some high-level clients in there because you brought up, different states. So some of you that were asking questions about states, the reason why you're probably asking is you guys are familiar with the Haven states, Alaska, Nevada, Wyoming, and Delaware. The reason why those are Haven states, all zero state income tax states. They're all privatization states, so it's not public record who the members are, and they have the most corporate-friendly bylaws, aka they have the best asset protection in the country. So we are fortunate enough to have a registered agent in all 50 states. So at the end of the day, we can set you up with a business entity in a Haven state, in your home state. It's going to be based off of, once again, circumstances. That's why for you high-level, business owners out there, take the consultation. Right, as Jason said, it's a free consultation. You get a complimentary LLC. Even if you have an LLC, still take the free consultation that Jason covers for you, just for the simple fact you never know. Maybe we can provide some light on a tax status and a structure that would actually end up being advantageous for you.